Hey everybody, welcome back to the PrimeXBT Trading Academy. If you are new here, don't forget to hit that subscribe button and the bell icon so you never miss an update. Today we are diving deep into the world of investing and tackling a hotly debated topic: technical analysis versus fundamental analysis. Which one is better? Let's find out. First up, let's talk about technical analysis. This is all about studying past market data, primarily price and volume, to predict future price trends. It's a bit like trying to predict the weather based on past patterns. Technical analysis use tools like charts and indicators to identify patterns that can suggest future activity. They look at things like moving averages, support and resistance levels, and various indicators and oscillators. My pro tip for you: if you are into short-term trading, like for example day trading, this might be your go-to strategy. It's particularly popular amongst forex and cryptocurrency traders, where volatility is high and patterns can emerge more frequently. The key here really is volatility, since in low volatile market phases, technical patterns can often be deceiving. So be careful. Patterns and indicators that work in strong up or down trends with large green and red candles might not work in a more boring, low volatility sideways trend. On the other side, we have fundamental analysis. This is like being a detective, digging, for example, into a company's financials and the overall economy to determine its intrinsic value. Fundamental analysis look at factors like earnings, revenue, industry trends, and even who's running a company. They study financial statements, read annual reports, and keep an eye on economic indicators like GDP growth, interest rates, unemployment rates, and inflation rates. My pro tip for you here is, if you are a long-term investor, this method might be more up your alley. It's often used by value investors who are looking for companies or countries that they believe are undervalued by the market. So, which one is better? Well, both methods have their pros and cons, of course. Technical analysis can be great for short-term predictions and for markets with lots of price volatility, but it's largely based on patterns and trends, and as we know, past performance is not always indicative of future results. Plus, it can sometimes lead to overtrading, which can eat into your profits. Remember the analogy I made about forecasting the weather? It's easier to forecast what the weather will be tomorrow than 3 months down the road. So as a rule of thumb, the longer your time horizon, the less reliable technical analysis becomes. Fundamental analysis, meanwhile, can help identify long-term investment opportunities and find undervalued stocks and cryptocurrencies. But it can be time-consuming, and it's not always accurate because it relies on the quality and accuracy of the data you're analyzing. Plus, it assumes that the market will correctly price assets in the long run, which is not always the case. So again, which one is better? The answer is, it depends. Your choice between technical and fundamental analysis should depend on your investment goals, your time horizon, and your personal preference. Some investors, like myself, use, for example, a combination of both. I use fundamental analysis to decide what the long-term picture of an asset is, and then I use technical analysis to decide when to buy and when to sell. This approach can give me a more holistic view of a market and help to make more informed decisions. An example: end of September 2022, I noticed that the past 50 years, whenever inflation started coming down from levels above 6%, this downswing usually also marked the low of the stock markets. I then used technical analysis on top of these findings to determine that the low of the S&P 500 should be somewhere around 3,400 points. I will leave a link to the corresponding video so you can watch it for yourself to better understand my approach. Now, if we have days of high volatility on, for example, the crypto markets, and I want to engage in more short-term trading, I might totally rely on technical analysis, because the shorter the time frame, the less important the fundamental picture becomes from my experiences. There are, of course, exceptions from this rule, for example, when important economic news is released. Regardless of which method you choose, here are a few tips to keep in mind. First, always have a plan. Know your investment goals and have a strategy for achieving them. Second, stay informed. Keep up with market news and trends and continually educate yourself about investing. And third, be patient. Investing is a long-term game and it takes time to see results. News about traders who supposedly make thousands of % return on investment per month are 99.9% of the time fake news and clickbait. At the end of the day, there is no one-size-fits-all answer. Investing is personal, and what works best for you might not work best for somebody else. So what do you think? Are you team technical analysis, team fundamental analysis, or a bit of both? Let me know in the comments below. If you found this video helpful, please give it a thumbs up and share it with your friends. And if you want more content like this, don't forget to hit that subscribe button. Until next time, happy investing.